good afternoon. You're watching Closing Trades on 18 Now. I'm Anisha Jain. With me, Saisha Faridi. And for now, the markets are in the red. 19,000 has been maintained for now, but at least during the trading session, we had slipped below the mark of 19,000 as well. So continues to be very tentative for the market towards the lower end of the trading session that we have seen. The Bank Nifty too is coming under quite a bit of pressure, almost 200 points shaved off the Bank Nifty as well. In terms of the key sectoral indices, it's the broader markets which are outperforming today. So they're not having a runaway rally, but at least there's some sort of outperformance coming in from the broader markets. Real estate and media names, they are the ones that have managed to eke out solid gains. So real estate index is up over 1%. Z Entertainment is higher for a second day on the row with a gain of almost 5%, and that's what is pulling the media index higher. Metals, however, are not having a great day, especially because the earnings haven't been that great. JSPL, for instance, is down 7 to 8%. That's dragging the index. Tata Steel is expected today, so we are watching out for that as well. But of course, the biggest event to watch out for is the FOMC meeting, wherein no surprises expected in terms of the decision, because it's going to be perhaps a rate pause. But any indication as to what they'll do in the month of December and how long will really the rates stay at an elevated level, and that higher for longer narrative, does it change or not, is the big question that the street is asking. Of course, in terms of the earnings reaction, we have seen Pharma delivering a good set of numbers, so that continues to stay perched as the highest gainer at the index level. You also have Reliance holding out with a gain of 0.7%, but then Adani group of companies seems to be coming under pressure, whether it's entertainment, ports, Wilmer, they're all down in the trading session.
Yeah, in line with the rest of the market mood, considering the cool-off that we've seen from the session top, although from the high to the low of the day, it's not a very large band that you're seeing. So in a very narrow band, we are drifting lower as we speak right now. 80 points lower. Sun Pharma, of course, is one key gainer today. Reliance as well is holding out about almost 0.5% in trade. So that's sort of supporting the index as we speak right now. And yes, Anisha was just flagging off the weakness within metals. Not quite the case with the Hindalco, at least. That's still holding up by about 1.25%. One must identify a couple of big movers in trade. And there's Vodafone Idea. That's clearly giving you a breakout. It's been quite the consistent performer of late. Today, too, the stock is holding higher by about 10%. And in case you were wondering, it's managed to hit a 52-week high. Who would have thought that about Idea, isn't it? There's Birla Soft as well after its numbers, a 6% dash there. Indus Towers, which is looking very strong. It's managed to surpass its 100 DMA. That stock is looking very strong. And then, of course, Vedanta as well is a gainer in trade. But let's chat a little bit more about what the market temperament is going to be and whether you should be looking to trade anything at all ahead of the big event. Much in the price as it may be, and a status quo, no move is what's expected from the Fed. But then again, you never know what the markets are going to read from the commentary. Naresh Mirani joins in on the show right now. We've also got a lot of our fundamental experts. Mayuresh Joshi too joins in as of now. Gentlemen, hi, both of you. Morning, rather good afternoon. Mayuresh, just wanted to get your sense first. A word on the markets, how the earnings of late have been.
Afternoon, Aisha. I think the earnings have held up pretty well. So across the spectrum, if you look at BFSI, the earnings have been pretty and relatively strong. In fact, Axis Bank, as an example, they showed an expansion in NIMs on a quarter-on-quarter basis. Advances growth for the sector as a whole, whether they are large banks or medium-sized banks, or even PSU banks for that matter, have shown strong resilience. To top that up, asset quality pressures are coming off every passing quarter, which strengthens the balance sheet even further. Obviously, I think the PSU focus in terms of recoveries and upgrades would boost the bottom line and offset the one-time provisioning or the excess provisioning that is required in expectations of the expected loss provisioning norms kicking in from this financial year. Having said that, I think the kind of moves that we've probably seen for a few of these banks, a little bit of a pullback should be warranted for a few of them. Within the NBFC space, they have performed exceedingly well. So I think stocks like Credit Access Grameen, as an example, very strong set of numbers, replicated again by companies like Spandana, Spurti, L&T Finance. So I think BFSI space has held up. Midcap IT has produced another quarter of stupendous earnings, and management commentaries are pointing out towards no damage to probably come from either the pricing action or demand dynamics, at least at this juncture. A few of the capital good companies obviously have reported a strong set of numbers. And those cement companies might have disappointed, but it's an obvious reason. Q2 is expected to be weak for monsoons. The second half should be relatively better for this infra-related proxy that probably comes through. So I think the earnings season has relatively held up quite well, I should.
Right. Naresh, hi, afternoon. How is it that you're reading into the market mood right now? Just about defending 19K as we speak.
So the drift continues in the benchmark indices. Nifty continues to drift lower, trying to find a base around that 18,800, 850 mark. On the upside, 19,300 means a problem zone. On the bank Nifty, we are still finding it difficult to make a decent enough bounce back after breaking that 43,500 mark. But at the same time, we are not seeing a similar downtick on the mid cap and the small cap indices. So overall, the bias remains that we get into a range, we form a new range wherein we can go test 18,600, 800 or multiple times and 19,300. Till the time we don't go beyond this band of say 18,600 on the downside or 19,300 on the upside, we are stuck in this range where all you can do is trade on reduced sizes and wait for a trend change going forward. As of now, we are stuck in the range.
Okay, point taken. Right now we are stuck in the range. That's the verdict. But Mayuresh, since you were talking about the earnings season, one can't ignore the kind of outperformance that we have seen from the pharma sector, whether it's the upgrade coming in from Cipla or the fact that Sun Pharma is holding up with a gain of around 2.5%. And then Piramal Pharma, that was quite a bit of turnaround story as well. What's your top bet within the sector?
Afternoon, Anisha. So I think we continue our positive focus on both Cipla and Sun Pharma. They, as compliance requirement and disclosure, they both remain on a global focus list for a length of time and continue to remain optimistic on them. The numbers have been quite outstanding. Cipla again revising their margin guidance from 23 to 24 odd percent. Higher end of the range is a possibility for the better part of this financial year. The kind of pipeline that they've got, specifically in its respiratory portfolio, I think that can do wonders in the next financial year as well as approvals start coming through. And that is probably something which is creating a huge impact as far as US formulation numbers are concerned. Similarly for Sun, the kind of pipeline that they've probably got, specialty sales now 16.5% of the total top line. R&D expenditure at 6.5%, but that's expected to inch even higher, maybe 7.5% for the better part of this year. 6 strong drugs or molecules in the specialty pipeline, which are across phases, phase 1, 2, 3, and across different timelines in terms of launches as well. So this builds up over the next few quarters, and as the pipeline starts getting monetized, the kind of numbers that you're expecting, both in terms of US domestic formulation sales, as well as the India number, where they're holding on to the numero uno position, I think that can very well continue. Obviously, the stocks have moved higher. The stocks have shown good, strong price action over the last few months, but we continue to remain optimistic on that. Yes, you're absolutely right. Piramal Pharma turned around quarter of sorts, but whether they can justify that in the coming quarter as well, to have a complete re-rating done in terms of the landscape that they are operating out of is to be seen. But within the space, Cipla and Sun Pharma is something that we remain optimistic.
Okay, that's the take coming in on what the pharma sector is throwing up. I don't know if Shrishti is here to highlight what Sun Pharma's performance is going to be like. We'll try and get her in just a bit. But let's hear it out from Ajay Kapoor, the CEO at Ambuja Cements, and how their quarter went by.
It's my pleasure to share with you the operational and financial performance of Adani Group's cement business for the quarter ended September 23. Let me provide you key highlights on the consolidated performance of this quarter and share insights on the way forward. Beginning with revenue, the revenue for the quarter came in at 7,424 crores, up 4.1% on a YOY basis. The realizations for the quarter were at 5,334 per ton. On the cost side, operating cost for the quarter was rupees 4,682. It shows a decline of 11.8% on a YOY basis. This is mainly due to 33% decline in energy cost attributed to our fuel management, which is driven by 38% reduction in kiln fuel, which is now at 1.82 paisa per 1000 kcal versus the previous year's same period 2.93 paisa per 1000 kcal. With the improvements in revenue and cost front, our EBITDA, excluding other income for the quarter, is at rupees 1,302 crores, a jump of 298% on a YOY basis. On a per ton basis, for the quarter, the EBITDA was 995, a jump of 291% and the margin expanded by 12.9% to 17.5%. A healthy PAT from 51 crores to 987 crores. As of 30th September 23, our consolidated cash and cash equivalents remain at 11,721 crores. On a standalone basis, net revenue exhibited a rise of 8% to rupees 3,970 crores, in line with the volume increment of 7.3% on a YOY basis. EBITDA excluding other income grew at 147% to rupees 773 crores, with margins expanding from 8.5% to 19.5%. On a per ton basis, EBITDA stood at 1,020 with a growth of 130%. Healthy PAT growth of 364% YOY at rupees 644 crores. Coming to strategic investments and expansions, our ongoing investments in capacity expansion and sustainability will enable us to achieve our long-term objectives. Our growth journey continues with our ongoing brownfield expansions of 8 million tons at Bhatapara in Chhattisgarh and Maratha in Maharashtra. These will be commissioned with highest ESG standards, 42 megawatts of waste heat recovery, and provision to utilize 50% alternate fuels and provision to operate on green power. This will enable production of blended green cements of 14 million tons post all requisite approvals. These projects are expected to be commissioned in next 24 months, and the capex will be funded from internal accruals. In line with our plan, the Ametha integrated unit in Madhya Pradesh has commenced clinker production, enhancing the clinker capacity of the company by 3.3 million tons. Our constant drive is on increasing share of waste heat recovery systems, alternate fuels and raw materials, and renewable power. Our ongoing investments in capacity expansion are on track and will enable us to achieve our long-term objectives.
Okay, so that was Ajay Kapoor from Ambuja Cements. But back to Sun Pharma. Shrishti is with us now. Shrishti, tell us what is your reading of the numbers?
Actually, an inline set by Sun Pharma this time around. The street was not penciling in a great set of numbers this time, but the company actually flared to do better this time, wherein we have seen the revenue seen a jump of 2.1% sequentially, while the EBITDA is almost flat at 3,181 crores, and even the margins, while we were expecting at 26.8% this time, the company clocked in a margin of 26.1%, but the profit has come in almost in line, a little bit higher than what we were expecting actually, at 2,376 crores. So that's about the numbers. But talking about the internals, then yes, there has been a disappointment from the US sales, which has been clocked at $430 million. Our expectation was at $460 million, because we were highlighting that the lower G Rev limit sales is something that could impact the Sun Pharma earnings. We will wait by for more details. But India sales has given a support a lot. 11% jump on a YOY basis, higher than what we were expecting is the performance. The global specialty sales has seen a jump of close to 19% and now contributes around 16.4% in the overall top line versus 16.2% in Q1 FY24. So sequentially as well, we have seen the global specialty sales contribution inching up in their overall revenue. And that's interesting to note that in the commentary of the management, Mr. Dilip Sangvi this time has not spoken about the outlook on the US market, India market and so on. He's actually today this time talking about the new launches or the new products that are in the pipeline in the research stage, and going ahead how that could provide or could play a key role in transforming the pharma industry, helping them once all these drugs get approval. All of these products are definitely a little away from the timeline. There's actually a time of 2 to 3 years when we can get these products if approved in the markets. But that's interesting to know that what management is commenting on these sidelines. So that was about Sun Pharma earnings. But yes, the stock is holding itself in green right now.
Okay, so that's about Sun Pharma. The stock still holding up with a gain of around 2.5%. You also have numbers from MMAS financials out. Look like an okay set. We'll wait to get more details on that one as well. Shifting focus to some of the other earnings, we saw the numbers from India Cements were on the weaker side. Safari Industries also saw numbers which were actually better than expected, plus that 1:1 bonus is something which is supporting the sentiment there. And you also have Vodafone Idea, which continues to gain higher by 8%, and the commentary from the Bharti Airtel con call is also flashing for you on the screen. In fact, in the telecom sector, let's hash it out a bit more, Mayuresh. What's your sense? Do you think Airtel, it's a very clear buy right now, given the fact it does not look like there's going to be a monopolistic kind of situation with Jio only, and there is a case that ARPUs are only going to rise?
Oh, absolutely. And that becomes the base case scenario, that you will see a gradual improvement in ARPUs as we head into the next few quarters. And that is a must, and that will happen. So once that happens, the kind of operating dynamics that happen specifically in the India wireless business will be pretty large, and that will translate into better earnings going forward. What it also does is it improves cash flows to a large extent. And the kind of debt obligations that Airtel has, both in terms of the spectrum payouts, in terms of their leverage payouts as well, that is taken care of with the improved cash flow that you will see because of the increase in ARPUs that will happen in a gradual and a calibrated manner. Again, on a consolidated basis, Africa, the African business, Bharti Africa has done relatively better. And the expectations is that the performance should continue being very, very smooth and gradually improving in the next few quarters as well, which should reflect positively in terms of the consolidated financials as well. So yes, I think even if it is not a scenario where hikes can be substantial, but hikes will come in the next few quarters, which can create a huge impact. So yeah, remain optimistic on Airtel within the telecom space.
Rajesh Palvia as well joining in right now on the show. Rajesh, hi, afternoon. Good to have you on the show. Just wanted to understand what trends are you spotting in the market, if any, within the large caps specifically?
So large caps are in sideways as the both indices, Nifty Bank, Nifty, both are in consolidation at this moment. Both indices are now trading near to their important critical support area as we have Fed meeting outcome today. So the market is still, taking a cautious bet at this moment. I think the major movement on the index front will come on the buying side above 19,150. That's the area needs to cross on the higher side. Then only we can see some short covering action. At this moment, some of the stocks which are looking promising, that is from the mid-cap space, trend is looking very promising. And we believe that, this stock can be looked at to buy. The kind of breakout which we have witnessed in on the weekly chart, almost a 7-8 week consolidation breakout, though stock is enjoying all-time high trajectory, but the kind of breakout which we are seeing on the near-term chart, it clearly shows that now this stock can scale up further higher, and possibly we can see a target of 2300, 2320 in the continuation of this uptrend. One can buy Trent at this moment with stop loss of 2160. Another stock that we like at this moment from the mid-cap IT space, that is Coforge. We have seen a very strong buying action in last couple of trading session. In the previous week, there was a dozy kind of candlestick pattern, and then again, stock is now managing to cross those high. Looking at the recovery from the lower level, we believe that furthermore upside momentum we can see in the Coforge in near term. We can see a target of 5160, 5180.
Point
one
taken.
can buy with stop loss of 5015. So these two stocks, yeah.
Right. Stay with us, Mayuresh, Naresh, both of you as well. We're going to take a very quick break on that note. When we come back, we'll continue our chat with our experts. Back with closing trades right here in ET now, still drifting a little bit lower while we're hovering around the 19,000 mark for the Nifty spot. It's 87 points lower for the Nifty futures as we speak. Pressure points, Jindal Steel down 7.5%, Adani Enterprises ahead of its numbers tomorrow, down 4%, Ambuja down 3.6%, MGL and India Cement are all seeing some bit of pressure trickle in. Let's pick up what Tata Motors as well too may be up to in trade, because remember that's also slated to come out with its numbers tomorrow. We are expecting expecting sales to be largely flat on a year-on-year basis. However, on a sequential basis, there could be an uptick of about 7.5%. The India business performance, a mixed bag considering we've seen what commercial vehicles have done. As recent as last month's data has come in and it's fallen short of street expectations. So we are expecting a meager growth of about 3.5% on a year-on-year basis there, while passenger volumes they're likely to go down by about almost 3% or so. But Mayuresh, before we let you go, just wanted to understand where your preferences lie within the entire auto pack right now, and where do you think there is opportunity to maybe add to positions or even buy afresh at these levels?
What we've got, Aisha, on our buy watch list within the four-wheeler space is Maruti. Maruti has produced a very decent set of numbers. And the expectation, again, in terms of their entire SUV portfolio, which a lot of other peer companies are also doing, should increase the volume growth substantially for Maruti. Whether that translates into a substantial market share gain, the consensus is that market share gain should be an obvious factor for Maruti as we head into the next few quarters. The second element in terms of margin stability should continue for Maruti as we head into the second half in the next financial year as well. Footfalls, order book remains extremely strong across their product pipeline. And the entire transition, Aisha, that we're probably seeing, both in terms of the internal combustion engines, the petrol and diesel versions, to the electric mobility platform part, I think that should be relatively smooth with the kind of calibrated capex that is probably going in as new capacities come in, new platforms come in, and new models start rolling out over the next few quarters. So Maruti definitely within the four-wheeler pack remains on our buy watch list. Within the two-wheelers, TVS has produced another set of brilliant numbers quarter after quarter. The expectations in terms of margins remaining in that range of 10.5%, 11%. Again, the expectations of a better product suite going forward, the distribution network increasing for TVS Motors as a whole, and the export component also contributing significantly to consolidated numbers. This is one stock that one can probably hold on to within the two-wheeler.
So TVS within the two-wheeler pack and Maruti within the four-wheeler is where the preference lies. Thanks, Mayuresh, for making time and speaking with us. Appreciate you joining us. In the meantime, bring up the chart of Relaxo Footwear as well. That's just reported its numbers and it looks like a good set of numbers. The profitability came in at 45 crores versus 24 crore. And look at the vertical rise on that one. The margins too have expanded substantially, 12.8% versus 8.9% that we saw last year. And that's the reason that stock has suddenly shot up. Naresh, or rather Rajesh, your view on this one, Relaxo Footwear, if you track?
So there is a reaction of numbers, and now stock has given a breakout of its previous swing high of October. And looking at the near-term setup, now stock is holding about 50-day, 20-day moving average. So now if stocks holds about 930-35 level, then possibly this momentum can extend further towards 965. That's the next level where stock may face some bit of supply pressure. 965 is the key level to watch for now for near-term trading perspective. If it crosses those levels, then this stock may head further higher towards 1020 kind of level also. So trail your stop loss at 930 and hold your position. I think this 965 level also can be breached. The kind of intensity on the buying side is showing that this stock may continue further more upside.
Point taken. In the meantime, Blue Jet Healthcare, which is the new listing on the block, is surging now. So after that 11% gain that we saw at opening, it improved to 14%. And right now, Blue Jet Healthcare is sitting with a gain of 18%. In fact, we did speak with the management earlier in the day to talk to us about what their expectation is of the future growth trajectory. Listen into what they had to tell us.
See, there's no structural change in the industry. And majority of our revenue is coming from the medtech industry, the imaging industry. And the dilution of the margins has been a global phenomenon for the chemical industry, and we are in performance chemicals. The reason being that the prices of the basic chemicals had gone up, the freights had also gone up, and in our case specifically, we had ramped up a lot on the manpower to provide for future growth, and therefore the cost on the manpower side had also increased, and therefore we saw some dilution in margins. But as the prices of the basic chemicals are returning back, you would see that in our first quarter results, there's been a margin expansion, and we are going back to the levels at which we were. And I would imagine that those levels are quite sustainable. and we will maintain the type of EBITDA levels and profitability that we had in the past.
Right. Okay. Since we're just getting back to auto numbers and we just had a discussion with Mayuresh Joshi on that, let's take it across to Shrishti and find out what the Motown report card has been when it comes to the monthly sales data. Shrishti?
So the report card is actually good till now because majority of the companies have reported numbers above our expectation. Case in point being from the passenger vehicle segment, Maruti Suzuki got the numbers close to almost 2 lakhs of units for the month of October itself, and this time the company has really surpassed our expectation of 1.85 lakhs, and this is a jump of 10% on a month-on-month basis. Like we were highlighting that Maruti Suzuki and Hero MotoCorp are the two companies that you need to be tracking, because what we understand that the dealers are highlighting that the inventory build-up is quite strong for specifically both of these companies. So firstly, Maruti Suzuki has done very well onto the October auto sales data, and let's talk about earnings numbers of the other companies like Tata Motors, which has done well for their automotive division, a 7% jump on a month-on-month basis for their passenger vehicle segment, and for Mahindra Auto division we have seen a similar kind of a jump, 7% uptick coming in over there. From the commercial vehicle segment, we were highlighting that it could be a tepid monthly sales data on the back of a strong base on a month-on-month basis, and that's why we are seeing Tata Motors commercial vehicle sales actually down 12% on a month-on-month basis, while Eicher Motors we have fled a little better above our expectation at 4%. From the two-wheeler segment, Hero MotoCorp numbers have actually come in line to our estimates, but we were expecting quite a higher number at more than 5.5 lakhs of units. 5.7 lakhs of units is what the company has clocked in, and that's a jump of 7% sequentially. But Bajaj Auto too has done really well. Bajaj Auto has clocked in a sales of 4.7 lakhs, 20% jump on a month-on-month basis, and even TVS Motors just a while back reported its numbers. 4.34 lakhs is what the company has clocked in, above our estimates. And lastly, from the tractor division, a mixed would rather call it, because Escort has told that this time it has been a bit of a muted sales growth this particular October, but coming for the upcoming festive season, the company is really positive, and at least all the companies have highlighted that going ahead they are expecting a bumper festive season sales this time.
That was about the report card that we have seen on account of the monthly data. But Shrishti, of course, we have earnings that will come from Hero MotoCorp today, Tata Motors tomorrow. Want to run us through the expectations quickly?
Yes, Hero MotoCorp is definitely in focus on the back of the earnings. This time we are expecting a margin expansion over 14% for Hero MotoCorp. 14.1% is our expectation versus the Q1 FY24 numbers of 13.8%. When it comes to the revenue figure, 5% jump is what we are expecting. EBITDA is expected an expansion of 8%, because do remember this time sequentially the volumes haven't seen that particular jump, almost 5% on a quarter-on-quarter basis. We have seen the jump coming in, but the premium motorcycle contribution is expected to go up, and that's why we can see the expansion in the margin. Talking about the profit, 983 crores is the expectation, almost a flattish growth on a sequential basis. But do remember that the average selling price, with the kind of price hikes that the company has been taking, is up by 3% on a YOY basis. But definitely going ahead, what is their outlook on the demand side? How is the inventory build up just ahead of the festive season and the product launch timeline for some of the upcoming product launches? Because Hero MotoCorp does keep highlighting that they have quite an exciting product range in for the upcoming time. So what's their view on that as well? We will keep in a track of all those details.
Okay, so that was about Hero MotoCorp, and of course Tata Motors will also be reporting its numbers tomorrow. But I think Shrishti, if you're still with us, you want to run us through Tata Motors as well?
Yes, Tata Motors will also be in focus on the back of the earnings, because do remember the sales were actually 7.5% up on a sequential basis, and this time India business performance has seen a mixed bag, because the commercial vehicle volumes were up 3.5% YOY, while the passenger vehicle volume fell 3%. And the JLR sales as well, we have seen in the quarterly update, wherein because of the plant shutdown, the JLR volumes were impacted a bit as well. So all in all, we are expecting a decent set. Talking about the margins and the numbers numbers that you need to be tracking. So JLR EBIT margin is expected at 7%, which is actually lower than what the company reported in Q1 FY24 at 8.6%. Though we can see an expansion in their India CV as well as passenger vehicle EBITDA margin. CV EBITDA margin expected at 10.8% and PVA EBITDA margin expected at 6.7%. Given the operating leverage, the cost efficiencies as well as the improvement in the segmental volume, we can see the margins getting a bump up, but definitely the JLR cash flow will also be a key to track, because the company has already said that they are presently expecting a positive free cash flow of around £300 million for Q2. So update on that will also be tracked upon. Talking about the numbers quickly, then onto the revenue figure, we are expecting 1,76,087 crores onto the top line. EBITDA expected at over 14,000 crores. Consolidated margin we are expecting at 13.2%, almost flattish on a sequential basis. And onto the profit figure, 4,315 crores is the expectation, and that will be a jump on a quarter-on-quarter basis of 40%. So that's the expectation of Tata Motors. All eyes on the numbers.
We'll leave it at that. In fact, we're going to slip into a very quick break as well on that note. Telecom, realty, technology, these are some of the outliers in trade, but the rest of the market is getting under pressure. Track the last lap when we come back.
Welcome back. Numbers for HCL flashing for you on the screen. Pretty much flat actually on a quarter-on-quarter basis. Not much improvement as far as even the volumes are 8.3 versus 8.2 MMSCMD that we saw last quarter, and similar can be said for EBITDA. Margins have also remained pretty much flat, 19 versus 18.9%. But I think for HCL, more important bit will be the commentary regarding what's happening in Delhi with respect to the entire transition to EV, and the overall commentary about volumes is what will really hold importance rather than just the numbers. Separately, in terms of the gainers, you also have Gravitas India, which is reacting to its earnings. Birlasoft high by 5%. Indus Towers, Relaxo Footwear, as we pointed out, and then Blue Star also continues the traction on the upside with the gain of around 5%. Sudeep Bandyopadhyay also joins us on the show. Sudeep, let's begin by discussing the auto sector itself. We were talking about the report card that we have seen for the month of October, and I guess November is just going to be better because it's going to be Diwali and the festivity is going to continue.
Yeah, absolutely right. I think couple of things. One is we had the Shraddh period in October. So obviously the numbers to an extent would have been definitely sacrificed. We expect those volumes to come back in November. Yes, of course, there is Diwali, there is Dhanteras, there is Bhai Beej and other festivities. So obviously the numbers are expected to be good. One factor I want to point out, I think pretty much all the components of the auto sector did well, except tractors. I think there was pressure on the tractor sales both for M&M as well as Escorts, Kubota. So we will expect the tractor sales also to pick up on the back of rural income coming back, the harvest season coming, as well as a lot of money getting into the hands of rural consumers should enable the tractor sales also to pick up in the near future. So yes, November should be a better month, and definitely the overall auto numbers for November, including tractors, should be better.
Sudeep, hi, afternoon. Good to have you on the show. What's leading to this excitement on Vodafone? There are reports that they're looking to exit Spain with that $5.3 billion sale to Zegona, but the stock is now at a 52-week high. Worth a look at?
Obviously, Asha, I think the Delhi meeting where Prime Minister also was there, I understand Mr. Kumar Mangalam Birla mentioned about capital infusion and a lot of investments to be made by Vodafone. Obviously, this can only be made provided the promoters bring in capital. So I think the one problem which was plaguing Vodafone was promoters not committing capital. Now, if that happens either through Vodafone or through Birlas, I think the company can swing back into a winning trajectory, into their winning trajectory very, very soon. They have the numbers, they have the customers, they have the systems, processes, pretty much. What they were lacking was, investment in the business for some time. And that's pretty long in this telecom business where things move very fast. Also, they have lagged behind as far as 5G investments are concerned. They have been losing customers, every month and quarter on quarter. Now, these operational things needs to be tightened. Capital needs to come in, and things should start improving. But I think the starting point is capital coming in, and the excitement around that is on account of promoters making the right noises from both the sides.
What about the real estate pack, and where does your preference lie within that? There are, the NCR players, there are Mumbai players, South India, and then of course there are commercial, players as well, like Phoenix Limited.
And I think overall, Anisha, overall real estate, we have been positive for some time, and we continue to maintain our positive view. Some of the statistics which are kind of bandied about is the Tokyo city has commercial space, total commercial space, which is much higher than the entire India put together. So obviously, in India where the GDP is growing at 8% or thereabouts, the commercial space demand will move up significantly in the coming years. We have already seen real estate demand coming in a big way as far as both affordable as well as high end, particularly in the high end. So our belief is that real estate for the next 4 or 5 years will have good time. Also, I must say the real estate sector has, there were a lot of question marks around real estate sector, the practices. I think all those are mostly things of the past. Most of the players have cleaned up their balance sheet. The GST implementation has happened. RERA has come in. Accounting standards have been tightened. So overall, I think it's a very safe place for the investors now to invest in, considering the growth momentum of the sector. And that's why we are seeing money coming into real estate sector. We believe that both residential as well as commercial should gain over the next few years. Phoenix, definitely. Macrotech, Oberoi Realty, Godrej Properties, all these can be looked at. We can look at the NCR and DLF. I think for a long-term investor, even at current level, DLF looks good. One can look at Shobha, Prestige. I think there is absolutely no problem. Just that one has to remember that because the prices have run up quite a bit, if you are in for 1 year plus time horizon, these are good investments to look at.
Right, okay, that's the take coming in on realty. Sun Pharma, that's a gainer today, continues to be a good day for BPCL. In fact, it's been a decent, past fortnight or so, or at least a week for BPCL. Today too, it's holding up by about 2%. There's SBI, there's Reliance Industries. Reliance, though, has fizzled out from the top of the day, just marginally higher as we speak right now. But let me take it across to Sharad, find out what the dealing room chatter is. Sharad, what's the stock being talked about?
Well, yes, in focus we are having Manappuram Finance, and what we are hearing from the dealers is there's buying seen in a couple of counters in the HNI segment, and also the volumes have been showing strength in the latter part of the day. Importantly, the stock is trading at its 100 DMA levels, but the street is expecting that the Q2 numbers, which is expected to come out on November the 13th, is expected to be very strong. Now, of course, the gold overall, the loan portfolio, that is expected not to grow up so much in the loan segment, but the overall consolidated loan growth is expected to come in roughly at 5% on a sequential basis, but the drive of the earnings will be from the non-gold loan portfolio. Now also the valuations are cheap, coming at almost 0.9 times its price to book on a trailing basis as compared to almost 1.4 times, which is the 5-year average. Now also apart from this, the 12-month target price as per the Bloomberg estimate comes at roughly 169 rupees per share. That means almost a 23% return potential is expected over the next 12 months. But currently we did see the prices coming in for the gold prices actually gone up, and the festive season is also coming in. So because of that, what happens is there might be a contraction of the margins as well, but this is only applicable for the gold loan portfolio.
Sharad, we leave it at that. That's the buzz across dealing rooms on Manappuram Finance. Just looking at some of the other movers, and clearly some of the metal names are the ones which are starkly under pressure. Of course, earnings reactions coming in here. on Jindal Steel in particular. Adani Enterprises is ahead of its numbers, I think, tomorrow. That's down about 3.5% or so. Rajesh, let's just get in what you make of, the weakness in metals right now, and if there is a trading opportunity here.
Actually, most of the metal stocks are struggling to give any kind of pullback. And if we look at the weekly setup, most of the metal stocks are sliding since last 3-4 weeks. And looking at the overall structure for most of the metal stocks are in downtrend. If we talk about Jindal Steel stock, given a breakdown of its important support area of 600 and now sustaining below to those levels. So I think there would be another round of selling pressure we can see in this stock, and possibly it may slide further towards 560 level also. Tata Steel is also getting more supply pressure. Now stock is approaching to its critical support area of 200-day moving average. So I believe that metal space one should avoid at this moment on the buying side, because the structure is already weak for the near term as well as for the short term. Most of the metal stocks may correct further from the current level. Another 3 to 4% correction we can see in the continuation of this down move which we are seeing.
Okay, just a bunch of other names, and Sudeep, have to discuss L&T with you. Blowout set of numbers. The order inflow, of course, is so robust. We all know that this forms part of pretty much everyone's core portfolio, but the stock has been unable to hold on to its gains.
Well, I really, Aisha, can't comment about why the market is reacting today in the way they are. But the fact remains that, as you rightly said, blowout set of numbers. What is more important, I would like to point out, is that, the global business, international business is now 35% of the portfolio, and it's growing. There is a huge amount of new fresh orders which are in the offing as far as Saudi Arabia is concerned. L&T is a very well-established player there, and they are expected to win many more orders in Saudi Arabia. So that's about the order book. The question comes about the margin, because the margins were shade below the expectations. But the fact remains that if you look at the L&T's order book and the execution pipeline, the legacy orders are now getting exhausted, which were low margin, and the new orders which are getting executed now and will get executed henceforth will be higher margin orders. So the margin profile of L&T also will change in the coming quarters. I think that's very important for the market and us to understand. So, I have no hesitation in recommending L&T even at current level for a long-term investor. Remember the other fact that they have been systematically unlocking, doing value unlocking, getting out of unproductive assets. Even the last quarter they did sell the Hyderabad land, and the working capital situation has further improved with the 1,000 crore plus coming in through that sale. So I think all the boxes they are ticking, and there is absolutely no problem in buying L&T even at current level.
That's a thumbs up coming in on L&T from Sudeep. But Naresh, what's your sense on Blue Star? Continues the momentum on the upside, and Keynes Technologies, that's managed to recover quite a bit from that cut of almost 8 to 9% that we had seen earlier in the day. It's pretty much flat now.
So Blue Star saw big volumes, plus the overall the trend is a bit dodgy here. It has been volatile for the first time after quite a long period of time, where it used to be a slow and steady mover. So till the time it holds above the 870 mark, the trend remains okay, but not the best stock in terms of momentum as such. So could be looking at it as a buy on dips rather than at current levels. Keynes, on the other hand, is something which has overdone the rally. So the stock has gone from 1,000 to 2,800 over the last 4 to 5 months. Created a classical top around 2,800. Should get into a range-bound move wherein 2,000, 1,800 could be a support. So overall, sideways to down for Keynes.
Okay, that's the take coming in on what some of these buzzing stocks are up to right now. In the meantime, let's just take a look at where Reliance has been. And again, a curious case here, Sudeep, because post the numbers, which were an inline set, that bit of a knee-jerk reaction, first day following the numbers, Monday it did hold up 2%, but again has fizzled out from there.
Yeah, it did happen that way, Aisha, but I think this is one stock which is definitely deserves a much better valuation. look, there are a whole lot of value unlocking triggers sitting inside Reliance, whether it's the retail, whether it's the the telecom, and even the green energy part. I think there are a lot of exciting things happening there. All the boxes are getting ticked by either the retail business or the telecom business and even the traditional business. The challenge has been in petchem. That's because of the overall pricing scenario prevalent in that particular segment. Beyond that, I think even the refining margin, oil and gas exploration, gas from KG Basin, all that has been pretty good. So I really don't see any reason for Reliance coming down from the current levels. In fact, our view is that Reliance deserves a valuation close to 3,000 rupees immediately. Of course, as and when value unlocking happens, there will be significant opportunities through those.
That's a take for the heavyweight Reliance Industries, and the earnings, of course, were also good coming in. And since then, we have seen a bit of an up move on Reliance Industries itself. Today, what's holding ground is, of course, Reliance on one end. You also have Sun Pharma, which is actually supporting the index right now. On the losing side, it continues to be IT. So, Infosys is your biggest drag at the index level, followed by TCS as well. Sudeep, for IT, yet again, there were divergent moves coming in. There were names like, Birla Soft, as well as some of the smaller mid-cap companies that managed to surprise the street. But if you look at the large caps, there's nothing that, makes it a compelling buy. Like, nobody's in a hurry to buy IT right now.
Yeah, absolutely right, Anisha. I think that's pretty much what I have been mentioning regularly, is that, the generic IT companies, there is not much excitement. I mean, they're good companies. There is no problem in Infosys. There is no problem in TCS, HCL Tech, or even Wipro. But the time to buy those are not now, because there is nothing exciting happening. Next couple of quarters, I think we should wait and watch. Whereas in multiple pockets where these niche IT companies are catering to segments where there is tremendous growth, there one should look at opportunities. I keep giving example of these rate gain technologies. Now they are in travel and tourism. Now travel and tourism is a booming sector. So rate gain obviously is booming. So is probably Coforge. A large part of their business is travel and tourism. Look at Persistent Systems. They have been doing the right things in terms of automotive linkages and becoming a part of automotive supply chain through technology. I think these are the opportunities one should look at this stage. Time to buy generic IT companies will come, but that is not there yet.
On the index itself, there's a sudden slip in the last 5 minutes, both for Nifty, Sensex, Nifty Bank. Your BTSC trade, if any, on the index and stock specific? Naresh, the question is for you.
So going to only one trade, a buy on BPCL with a stop loss at 353 and a target price of 365.
Index, any trade, and what do you make of this slip? Naresh?
On the index, the same, the drift continues till the time we don't go beyond 18,600 or 19,300. It's better to avoid trading the index as of now.
For the index and any stock specific strategies as BDST ideas?
Well, I think one can look at Credit Access Grameen. Stock is looking showing strength, and we believe that Credit Access Grameen can continue further more strength, and 1680, 1700 is the possible target in the coming session. One can buy with stop loss of 1590, and the second stock is RK Forge. This is a third consecutive day where stock is forming higher high low formation. Stock is now trading about 20-day moving average. So RK Forge is another stock where one can look to buy. 660 is the BTST target with a stop loss of 630.
Okay, let's begin winding up for the day. We're closing in pretty much around the session lows. Broken that 19,000 mark once again, 0.5% lower, 88 points down. While some of the metal names have held out, you've got weakness coming in for Adani Enterprises, for Tata Steel, for Asian Paints. L&T, saw cool off coming in, 1.25% lower, and that's been the case with Maruti as well, along with Reliance Industries. But that's pretty much it in this edition of Closing Trades. We'll see you again with all the market action tomorrow morning at 8 a.m.